So this is trading basics. We're talking candlesticks. Let's get into it.
You make me move, you make me dance, you make my heart beat super fast.
So here's a chart, a candlestick chart, obviously, of the SPX, which represents the S&P 500 cash index. Doesn't really matter. It can be any chart of any instrument, crypto, forex, currency pair, commodity. It really doesn't matter. We're talking about the charts, the candlestick charts. So why do they call it a candlestick? So let's examine. Let's zoom in here to one candlestick. We'll pick a random candlestick. I don't know why this computer is moving so slowly. Let's do this one right here. Okay, let's focus on this bad boy. Let me get my brush out. Show screen brush. Give me a second. All right, right here. So we're going to focus on this candlestick right there. So they call it a candlestick because this part of the body kind of looks like a candle with a wick, like a wick sticking out. Right? Makes sense. Kind of looks like a candle. So this is considered the wick, and this is considered the wick. Any part that's sticking out of the body. Now you might ask, what's the difference between a green one and a red one? Well, what that means is, depending on the time frame, so this is a daily chart right now, we're on the daily, so each one of these candlesticks represents 1 day. So this means that we open the day right there. So you start the body at the open. If it's a green candle, it dropped all the way to this price here, recovered, went all the way up to here, and then at the end of that day closed at this level. So basically, buyers came in at the beginning of the day. It was a sell-off, so it was red, and then buyers came in and pushed it all the way up, all the way up, all the way up to here. Then there were not many buyers up there. Nobody wanted to buy it up here, and they sold off and they closed here. So really, all it represents is buyers and sellers psychology. Buyers found this price to be fair. They push it up. This was a little too expensive for people. So they close it right there. That's all. And again, the inverse is true for the red candle. Let's focus on this candle. This was the opening of the red candle. Opening of the day right there. They were buyers and sellers here. They pushed it up. So they thought, buyers came in, they pushed it up. They thought it was a good price. And then something occurred, whatever it may be, and they realized, you know what, it's a little too expensive right now. And they dropped it all the way down. And look, this doesn't have a bottom wick. That means all the way to the end of the day they were selling. There was no one to push it up. So it was selling pretty much throughout the day besides this portion here. So that's what a candlestick is. That's why it's so important to know the wicks, the open, the close. Now, on the next video, we're going to explain the different kinds and shapes of candlesticks and how they represent different psychologies of buyers and sellers, different moods. We'll talk about it in the next video. I'll see you then. Oh, don't forget, hit the like button, hit the follow button, hit the subscribe button, hit the share button, do all that fancy stuff down there. And I'll see you in the next video.